Investing can seem like a complex and intimidating world, especially for beginners. However, with the right knowledge and guidance, anyone can become a successful investor. Reading books written by renowned investment experts is the best way to gain valuable insights and practical strategies. In this video, I will be sharing 3 books that I think every investment beginner should read before embarking on their investment journey. Each book provides unique perspectives and lessons to help you navigate the world of investing. Let's dive into the books right away. Number 1, The Intelligent Investor by Benjamin Graham. Considered the Bible of value investing, this classic book by Benjamin Graham has been around for over 70 years. Benjamin Graham is considered the father of value investing, and his 2 books, Security Analysis and The Intelligent Investor, defined his investment philosophy, especially what it means to be a value investor. Arguably, his most famous student was Warren Buffett, who is consistently ranked among wealthiest persons in the world. This book is a must-read for any investor, regardless of their experience level. There are 3 things I have learned from the book. First, understand the difference between investing and speculating. You should focus on investing in companies with strong fundamentals and a competitive advantage, instead of investing in the next hot company that your friends and relatives are talking about. Always analyze the company's financial statements, management quality, and competitive positioning before making any investment decisions. Second, practice the concept of margin of safety. On top of only investing in companies with strong fundamentals, you should only invest when the price is right. Look for stocks that are undervalued relative to their intrinsic value. This provides a buffer against random market fluctuations and potential downside risks and increases the likelihood of higher returns. Third, be patient and adopt a long-term perspective. Avoid reacting to short-term market fluctuations. If you have invested in companies with solid long-term prospects, then you should hold on to your investments for the long haul to benefit from compounding growth. The second book is The Little Book of Common Sense Investing by John Bogle. John Bogle was the founder and chief executive of the Vanguard Group, and is credited with popularizing the index fund. He emphasizes the importance of low-cost index fund investing as a sensible and effective strategy for long-term investors. He advocates for simplicity and staying the course. The first takeaway I had for this book is to embrace the power of passive investing. Consider investing in low-cost index funds or ETFs that track broad market indices. This approach provides diversification, low fees, and a long-term focus on overall market growth. Second, when investing in index funds, you should always seek to minimize costs and maximize returns. Pay attention to expense ratios when choosing funds. Lower fees translate into higher investment returns over time. Opt for funds with low expense ratios and avoid unnecessary portfolio turnover. Lastly, stay disciplined and avoid market timing. Invest consistently and resist the temptation to make frequent changes based on market fluctuations. Stick to your investment plan and allow time and compounding to work in your favor. The last book that I think all beginner investors should read is One Up on Wall Street by Peter Lynch. As the manager of the Magellan Fund at Fidelity Investments between 1977 and 1990, Peter Lynch averaged a 29.2% annual return, consistently more than double the S&P 500 stock market index and making it the best-performing mutual fund in the world. During his 13-year tenure, assets under management increased from $18 million to a whopping $14 billion. In this book, Peter Lynch shares his insights on how individual investors can achieve success in the stock market by leveraging their own unique advantages and observations. The first takeaway is to invest in what you know and observe. Use your personal experiences and knowledge to identify investment opportunities. Pay attention to the products, services, and companies you interact with daily. Your insights can give you an edge in identifying potential winners. Second, focus on a company's growth potential. Look for companies with strong growth prospects, a sustainable competitive advantage, and a capable management team. Consider factors such as sales growth, industry trends, and market share. Lastly, do thorough research and due diligence. Before investing in a company, analyze its financials, competitive landscape, and future prospects. Conduct thorough research to gain confidence in your investment decisions and ensure you're making informed choices. Reading these 3 books will provide you with a solid foundation of knowledge and practical strategies. The key takeaways from each book emphasize essential principles such as value investing, long-term perspective, diversification, and understanding the companies you invest in. Applying these takeaways to your investment strategy will help you make informed decisions, manage risks, and increase your chances of long-term success in the world of investing. Remember, knowledge is power, and continuous learning is key to becoming a confident and successful investor.